All right, welcome to Casino Trades. We will be here doing some top-down analysis on the Nasdaq, right? So first thing you want to do when you want to do a top-down analysis, you want to start on the weekly chart, right? So get y'all a cheat code to get to the weekly chart. It's a little shortcut, right? You can just press 1 and a W, and the week gonna pop up. Press enter, it's gonna pop up on the weekly chart, and then you can do the same thing for a daily, right? You can just press 1D, and it's gonna be the 1 day equals, or let's say you're looking for the hour chart, you just press 1 and then an H. Hour chart, let's say you're looking for the 15-minute chart, you press 15 and then M. You see what I'm saying? Right. You press 15, you're gonna pop up 15-minute chart. You put the 5, you're gonna pop up 5-minute chart. If you're looking for a seconds chart, you just press 15 and the S is gonna be the second chart, right? So let's just start with the weekly. So we're doing top down analysis. We're gonna press 1W for the weekly, right? So now let's zoom in. So you want to start on the weekly chart. First thing you want to look for is the highs and lows, right? And basically, what trend are we in? Are we bullish? Are we bearish? Stuff like that, right? So the first thing I see all-time highs is up here. So you want to draw all the highs. You want to draw all the highs first, right? Just to see where's all of the liquidity, right? Where's the buy side liquidity, right? So let me go chart all the highs. Another high, another high. Wow. So now let me chart all the lows. So let me chart. So this is the low. Bam. This is yesterday's low. So let's annotate it. That's yesterday's low. Right here. This is yesterday's low. This is the previous day, yesterday's low, which is liquidity. Right? Bam. What we got right here? We have a fair value gap, which is a fair value gap. You see that fair value gap? Which is a buy side imbalance, sell side inefficiency from here to here. Now we have a fair value gap, and this is a bullish fair value gap, right? Which is called a buy side imbalance, sell side inefficiency, right? Bearish fair value gaps is a sell side imbalance with a buy side inefficiency, right? It just flip flop. So this is a bullish fair value gap, which is called a BISI, and this is on the weekly time frame. So let's annotate that. I want to make sure I put weekly. Weekly, right? And then right here we have this is previous weeks. So wow, previous weeks. So sorry, none of these right here was yesterday. These are our week's lows, right? Week lows, week highs, right? Like the week, right? So now let's go to the daily, and we see we're bullish on the weekly chart. Why are we bullish on the weekly chart? Because we created, see this high right here? You see this high? We closed above this high. So now this is basically like a market structure shift, closed above the high. You see what I'm saying? So that's how I know we're bullish right now on the weekly chart. Right, now let's go to the daily. Remember, you press 1D, get to the daily. Now we're on the daily chart. So now you want to chart yesterday's highs, yesterday's lows, and stuff like that. Right? So let's delete this zone right here. Okay, so now let's zoom in a little bit more. So let's draw the highs. This is the high. This is another high, which is liquidity. Right? So this is yesterday's high, the day before high, the day before high, and the day before low. So you want to annotate that, right? Low, low, and then right here going to be the day before's high, yesterday's high. So now we understand if it breaks out, where is it going to go? Right? If it break out, it's probably going to go over here. If it break out, it could go this way. It's going to break out. So I'm saying, so you want to see the different levels. So you want to chart your buy side and sell side to find out different levels. That's how you find the levels. Right? If it break this level, now you know where it's going to go. Now you're looking to see what actually happens when it breaks this level and it sweep it. Do it just run up? Do it displace up? Do it displace down? Do it consolidate? Right? This is everything. This is what I be doing to see if it's going to go to the previous, if it's going to keep going, basically, right? So now, after I go to the 15-minute, remember, I'm looking for any imbalances, any fair value gaps around here. So we see a fair value gap right here on the higher time frame, which is a daily. So there's drop from here to here. Bam. This is a daily fair value gap. Right here, right? This is the daily fair value gap. But what you see here, you see how it's traded in the upper quadrant already? So you see how it's traded in the upper quadrant of this fair value gap, which is a sell side inefficiency, buy side imbalance, which is a bearish fair value gap. Right? So the fact that it already closed above, up in the upper quadrant, is showing that it's not super bearish. Because if it was super bearish, right, it'll do this. You see how the first touch in here, look what it did. It stopped at equilibrium. It didn't even get to equilibrium of the range, right, which is here. The 50% is equilibrium of the gap, right? It didn't even come to equilibrium of the gap. And look what happened. It dropped back. It went right back down to support level, which is, remember, the market lets do 4 things: generate liquidity, take the liquidity, rebalance to an inefficiency, or rebalance to equilibrium, right? So look what it did. After it took all of this buy side right here, look, buy side, right? It swept the buy side. It swept all of these highs. After it did that, so it generated it, and then it swept it. That's the 2 things out of the 4 that the market do. So now I got to do the other 2 things, which is rebalance, which is to come back. It rebalanced to an equilibrium. Equilibrium is basically 50% of the range. So you see it's basically from here. If you get the measuring tool, you'll catch it. It'll be like basically from here to here. It has to rebalance, right? It has to come back, right? So it's either going to come back to equilibrium, which is 50% of the range, or it's going to come back to an inefficiency, which is a gap. Look what it did. It came right back to an inefficiency, which is here, and then it went back into it, showing signs of bullish, and it created a market structure, which is look what it did. It created a higher low. I'm sorry, it created a higher high. See, it created a higher high and a lower high, showing signs of bullish, right? Showing signs of bullishness. He said, show the screen. So what I'm doing is, I'm doing this on, I'm recording it, right? So you'll be able to catch the videos when I chop them up and I post them on Instagram or on Facebook. Or, I mean, when I chop them up and I post them on Instagram or YouTube right now. So right now, y'all won't be able to see my screen until you either go watch it live, you either go watch it on YouTube, like you go watch the full version on YouTube, right? Or you have to wait to go on Instagram and I'm gonna chop them up, you know what I'm saying? And then snippets. So, like I said, so like you see what it's doing, it's rebalancing. Now look what it did. Now it came back and it traded back into the upper quadrant of this fair value gap. Right? Now it's trading in the upper quadrant of the fair value gap, showing signs that, so when you see that it's closing, when you see candlestick close in the upper quadrant of fair value gaps or above equilibrium, it's showing signs that it want to continue to go higher. Right? So that's why you see that it closed above, and then look what happened. Look what happened. It stopped right here. See that? It didn't come back all the way down here. You know what I'm saying? So now, and look what happened. Now look what happened. It's trading. You see how it came up here, even though it respected it, it came up here. It came up here. You don't want to see sign. You don't want to see it come up here at all. Right? That's how you want to know if we're super bearish or we're super bullish. Anyways, so now we're on a daily. So now I got the daily. So now let me draw my yesterday's high, yesterday's lows, right, which is here. So let's annotate it, which is yesterday's high, right? And then this day right here is the previous day's high. Let's annotate it, which is I'm gonna just put yesterday's high because it's previous day's high. So now we have all our levels right here on the higher time frame. Right? We got all our levels on the higher time frame. So now, right? You can still draw other zones, but you just want to stay right here for the moment, right? Of course, we have these highs. We have these relative highs also, right? It's just annotated right quick, which is called which is buy side liquidity, right? This is all on the external. None of this is internal. All this is external, which means it's on a higher time frame. Right? In a word, I'm about to, after I do it and edit it, I'm gonna post it on YouTube, so y'all be able to get it. You know what I'm saying? Within like an hour on YouTube though. If you want it on Instagram, you gotta wait till I chop them up. You know what I'm saying? He said, when you doing your, hold on, I got you. So I'm almost done. I got you, Rich. If you want shit, we can hop on me and you if you want to after this. So yeah, so now I got my external bias. I got my external thing going on, right? So now I go down right to a 15-minute. Remember, the cheat code, the shortcut to get to a 15-minute time frame is just press 15 and then that's it. Press enter. You don't have to press all the other things, right? So What do you have here? So now we're on a 15-minute time frame. Right here, you want to look at to see, okay, where is it even at? Like, is it like, do you see relative high? Do you see relative lows? See what I'm saying? What do you see? Right? Because you want to build a bias. You want to build a bias to see, okay, where is it looking to go, so I can catch an entry, so I can catch a play, right, to that direction. Right? So as you see here, we see a nice trend line right here. Nice trend line right here. Wow. But anyway, before we do that, let's go back. Now, what I like to do, right, I love to go back to see, okay, what are we respecting? I love to go back, like right before I do what I'm doing, I want to go back to see what are we being respected? What's being respected? Are we bullish? Are we bearish? Right? So now, I'm on a 15-minute time frame. Now, let's go back. Let's zoom in right here, right? Let's zoom in right here, right? So now, I'm gonna delete this weekly fair value gap just so we can get it a little more cleaner. So let's go from right here. Right here. So look what I see it. It's rolling up. It's coming up. It's coming up. It finally reached a high. Right? It finally reached a high right here. So now I'm looking to see what happens after it reached this high. Like what actually happens. So all I see, it hit a high and then it just dropped. It displaced down. That's what happened. So I'm looking for, did it create an order block? Did it create a bear block? Did it create this? I'm saying. So I'm looking to see what did it create. So I'm seeing that it keeps, so this level right here is basically resistance. This level is resistance. Remember, resistance is always above. Support is at the bottom. Resistance is above, support is at the bottom. Right? So I see this zone as resistance, and this is a super liquidity. Right? Look what's happened. It's super liquidity and it came down. And then it came right back into this zone. So right, so this is it looks like it's an order block. So let's draw this order block. Right? So an order block is a up close or down close candle. So let's look for it near a PD rate. So I see this red candle right here, even though it's blue, but on my chart it's the blue candles are green, which is the up, and the white candles are bearish, which is to go down. Right? So my white candles will be my red candles, and my blue candles are my green candles, right? To go up. Right? So first thing I see is an order block right here. One down close candle and another fair value gap right here. Bearish order block. And then look, it has to create a fair value gap. You see the fair value gap right here? Fair value. So now, bam. Got the fair value. And so we have, so as you see, it basically, this bearish fair value, this bearish order block, as you see here, it did not work out the way we thought it was going to work out. Look what happened. So when it came back down, it's supposed to hit this level and reject. It's supposedly supposed to do this. Come back down, hit the bottom of the fair value gap and reject down. But look what happened. It actually hit it and went back above. And like I said, you see how it's trading. So you see how I mean that it's above, it's inside the upper quadrant of the fair value gap. That's how you know that it's not super bearish yet, because if we were super bearish, it's going to respect the bottom quadrant of the gap. You see how it came above, and then now now it's trading above. So now it's treating equilibrium. It's trading equilibrium right here of this gap as support. Right? That's basically what it's doing until eventually it breaks out. But anyways, so let's see. So let's just draw it through right quick. So it's holding. So you see that it's never going above these highs. Right? But if you took this order block, you would have lost. Because why? We were expecting it to stay here. Anyway, it would have been a small loss. But anyway, let's see what happens. So finally, it came right here and then it just displaced down. Right? So the first thing I'm going to do is see what happened. Why did it displace down? It looking like it's probably an order block right here, right? So close below fair value gap right here. So potential order block. So if you just be patient, you can literally catch a play the moment it comes back into the order block. And look what happened. The moment it came back into it, dropped. And then look what happened. Did it trade in the upper quadrant of this fair value gap? No. Look what happened. We expecting it to reject the bottom quadrant of the level, which is equilibrium. We don't want it to close above equilibrium. And look what happened. The moment it came to equilibrium, it dropped down, it dropped, and it kept dropping, showing signs of we're super bearish. We're hella bearish. You know why? Because we couldn't even trade in the upper quadrant of the level. You know what I'm saying? We couldn't even trade in the upper quadrant of the level. So you see how if you'd have been patient, you could actually took this play. But anyway, they just keep on going. So finally, we're coming through. We're bouncing here. So this is where we at right now. This is where price is at right now. So let's go in a little bit deeper. Delete that. So remember, this fair value gap is a PD array, right? So that's where you want to catch your order blocks. So you see how we see 3 blue candles, and then we see this aggressive candle down, showing signs. So we're looking for a close below this level, right here, below this level, and we have that, right? We have that right here. Let's draw it. Bam. Now we're looking for the fair value gap. Where is the fair value gap? The fair value gap is here. This wick to this wick. Here to here. Wow. So we got both things. We got the close below, right? And we got the fair value gap, which is a order block, right? And look what happened. It traded in the lower quadrant, of the fair value gap. And look what happened. Did it get to equilibrium of the range? No. This is equilibrium of the range. It never got to equilibrium of the range, right? It never got to equilibrium of the range. It traded in the lower quadrant of this level, showing signs of bearishness, and that's why it dropped. Another thing, did it trade in the upper quadrant of the level? No. Did it even get to the main? It didn't even get to the mean threshold of this order block. The mean threshold is basically the most important candle, basically 50% of the most important candle, which is right here. Bam. Did it get the mean threshold? No. Mean threshold. Did it get the mean threshold? No, it didn't. It didn't even come nowhere near it. Another thing, did it come to consummate encroachment of this wick? Didn't even get there either. Let's draw that out also. Of this wick. This is the order block right here. Did it come to 50% of this wick, which is called consequent encroachment of the wick? No, it didn't. So what you could have did was you could have literally waited till it came back to this zone right here, went short, went here, put your stop loss literally either at equilibrium, the mean threshold of the order block, or consummate encroachment of the wick, and you could have been targeting the lows, which would have been here, which is a 1.8 R trade. That would be first TP, or you could take it to the. And so you see how these double lows right here. So you see these double lows. This is double lows right here. Low, another low, and another low, which are called double lows or relative lows, right? That's still unmitigated. So look what happened. So right now, so look what happened again. It came back into the fair value gap again. So look, hit TP, right? Let's say your TP would have been at the low hanging fruit with this right here, which still would have been a good trade. You really would have been risking. You would have been risking 78 points to make 134 ticks, which is a 1 point. If I put it down to where I said, which is a 2.3 R trade. You know what I'm saying? Low hanging fruit. Sold some runners, and then when they came back into this level, which is right here, could did the same exact thing. But now you could risk way level because you could risk way less because why? You already got more cushion. You just won this trade right here. And look what happened. Is it trading in the upper quadrant of this level? No. Did it even get to equilibrium of the level? No. Did it even get to mean threshold of the order block? No. Did it get the consequent encroachment of the wick? No. Showing signs of bearishness, right? So this is right here where market is at right now. The market is going to open up right here. So let's see what happens when the market open up. So I'm expecting the market to open up and come down and take these lows before we go any bit higher. That's just my analysis, right? It can come up here, tap into this order block again, but it's already right now. It's respecting bearish things right now. It's respecting all bearish stuff right now at the moment, right? On a smaller time frame, right? From the 15 and lower. So until they break up, until they do this right here, come take these lows, and then come back up, retest to go back higher, I'm not thinking bullish right now. That's just from my analysis. So if you need any help, if you have any questions, anything you want to do, and I trade ICT concept. That's where I get my breaker blocks, my order blocks, the inverse fair value gap, the consequent encroachment, the mean threshold, equilibrium of the range. All of those things are ICT concepts, which is called smart money concepts, smart money concepts. Right? So if you need any help, comment below and I'll get to it, and let's get it, man. Continue to become the person that do the thing to eventually have Mr. or Mrs. Profitability. Let's get it.